It's Sunday the 3rd of April 2016. This is a chart for Tiger Resources. Tiger's not a stock that I've ever charted in these videos before. They're a copper producer in the Democratic Republic of Congo. They've had a lot of issues in the last 5 years, huge debts, upwards of 150 million US dollars of debt by the end of this year. I think they'll have 25,000 tons of copper a year they're producing at probably definitely in the lowest third of producers around the world in terms of all-in costs. So they're a fairly low-cost producer. While they've had all these debt issues, the stock's been absolutely crunched down to, there's this day at the start of last year where it was crunched about 70%. And that, I think that was, people thought the company was very likely to go broke at that point. They've negotiated their way out of that, so they've got new loan terms and longer dated loans and interest only, importantly for this year, through some hedge funds, large resource hedge funds backing it, and the World Bank through their IFC fund. One thing that I've always liked about Tiger is just that they can actually produce their commodity and operate a mine properly. A lot of these companies that struggle and eventually go broke are because they can't actually run a mine site. Whereas Tiger have shown through 5 years of production, they're generally pretty good operators. Technically, I think it's after it had that day where it was crunched 70% and down to 3.5-4 cents. It's really held up nicely and forming a really good base here. So it's been in this 4 to 10 cent range for a year now. And I think just in the last few months, I'm seeing signs of life here. I think the copper price, I think copper's bottomed as well at the start of this year, and it's showing some potential upside as well. And Tiger's probably the most leveraged company to the US dollar copper price, with all its debt in US dollars as well. You can see the volume's just starting to pick up here. I've talked about this in these videos before, but what you want to see is these periods of no volume, where everyone's leaving. There's no sort of interest in the stock, and often that's the time to enter. And you can see a little bit of action just coming in here in the last 6 weeks with the copper price rising. So I think Tiger is definitely a turnaround story, and there's still risks here that the company could go broke. I think the quarterlies will be important to watch if they can start producing. Show good signs that they can really get those production costs down. I know that they're using more grid power now, which has been a drag on some of their costs in the past. Importantly, they produce copper cathode as well, compared to some of the other producers, so they really get the full price for their copper. Whereas some others, producing concentrate, have got a few little bits and pieces. That means they don't get the full copper price for their product. But I think they're expanding production as well, which is important. It's one thing to take on debt to save yourselves, but if you're taking on debt to expand production and get those costs down further, that's often a good sign. And I think, as I said, I think these guys know how to run a mine. They just reshuffled their management team as well, so that's looking a bit more stable. So it could conceivably stay in this range between 4 and 10 cents for another 6 to 12 months. It wouldn't surprise me, but I think the balance of probabilities now suggests that there's a good point of entry here. But we'll see for their latest quarterly will be in the next 3 or 4 weeks. So we'll see if that can show signs that the turnaround is going to be sustained. But I'm starting to enter this stock fairly aggressively, and I think with the copper price having bottomed, that there's really good upside in this stock. If copper ever goes back toward $3 a pound, I would say this would be 3 to 4 times the price at least, with their relatively low cost production and good volumes.